Well, it's very nice to be with you here today. I'm looking forward to sharing something very helpful, which is going to be how to look at gold prices between now and the year end, as well as some potential excellent opportunities there are in silver. Now, I consult for HYCM Capital Markets, and I have a lot of experience as a financial analyst. I'm also a trader, and I'm often in the GCC region, appearing on CNBC Arabia or Bloomberg Ashraq. In the UK, I'm sometimes on the BBC News as well as Times Radio. And I'm looking forward to talking to you about gold. Now, HYCM has a good reputation in the GCC region. We were established in 1977 and here in Dubai since 2006. So over 10 years presence here in Dubai, and we also now have offices in Kuwait. We're regulated in the UK, the highly coveted Financial Conduct Authority, in Dubai, in Cyprus Securities, and in the Cayman Islands. So we're a very regulated broker, and we pride ourselves on being trustworthy and able to look after investors' deposits. Our offices are all over the world: London, Dubai, Kuwait, Hong Kong, Limassol. But now let's get on to the main point. And the main point is what drives gold prices. Sometimes people feel very confused about gold. And maybe you've seen online, should I buy gold? Should I sell gold? Is this the bottom in gold? But actually, understanding gold prices is not actually that hard when you understand what drives gold prices. In this presentation, I'm going to show you which broad areas drive gold. And then if you would like more information, because my time is limited here, please come to booth 110 and I can explain it in more detail and go into it in more depth. So what drives gold prices? There's a few things. Real yields, the dollar, gold ETFs, and seasonal demand, as well as Federal Reserve policy. So this year, as we've already heard, gold prices have been falling mainly due to relentless dollar strength. Now, I'm not going to repeat the reasons why the dollar's been strong. It's so widely reported, it's self-evident. We all know it's hawkish monetary policy from the Federal Reserve as the Fed tries to get on top of inflation. They've had to keep hiking interest rates. That's supported the dollar. We don't need to repeat that. But what many people don't understand is that when real yields fall, gold rises. So real yields have been rising. Can you see this sharp rise in real yields? The turquoise line? Well, when real yields are rising, gold falls. What's the real yield? It's the nominal bond yield minus inflation expectations. So you take the US 10-year yields, subtract from that inflation, and then you have the real yield. And this is the key part which I see many retail traders getting wrong time and time again. It's so frustrating, because if they just knew this, that when you get real yields and the dollar moving together, then gold's moves are greater. Let me say that to you again. When real yields and the dollar move together, gold's moves are greater. So you see here, around 2020, when we had the dollar and real yields moving lower, that's the turquoise and the blue line, look how gold gained. And then conversely, what have we seen recently? Real yields surging. What's the dollar been doing? Surging. What's gold been doing? Falling. So you see, when you understand that gold moves in an opposite direction to real yields and the dollar, you will avoid asking a question like, why is gold falling? Shouldn't stagflation mean that gold gains? So this year, dollar's been surging, real yields have been as well, so gold's falling. Just knowing that puts you 90% ahead of the majority of people trading gold who don't have a professional background. The other thing that drives gold prices is ETF demand. ETFs have become more and more popular over the last sort of 10, 15 years. And in the last 4 months, we've had 4 consecutive falls of ETF outflows. See that big spike in March? There was a lot of ETF buying in March. A lot of retail traders thought gold was going to have a huge bull run. A lot of traders made a big mistake, and a lot of those ETFs are now reducing. So you can see North America, Europe, Asia, all been reducing their ETF holding over the last few months. The other thing that drives gold prices is seasonal demand. Now, in the West, I live in the UK, gold is mainly decorative. But in the Near East, gold is more of a store of value. So there is a seasonal pattern that reflects that tradition. Around the start of the year, gold prices tends to gain. So that's mainly due to the Chinese Lunar New Year and the traditional gift of giving gold. So from about December the 24th to about February the 20th, if you look at the seasonal pattern, which I do using this excellent seasonal product called Seasonax, you'll see that gold's gains are really quite marked around the turn of the year, from December 24th to February 20th. What does that tell you? For those of you who are canny, it tells you this. If the Federal Reserve announce a rate pause at their December meeting, that would be in line with a strong seasonal pattern for gold. We'd have real yields falling, dollar falling, Fed monetary policy in line, then that would be the easiest trade in the world to go long gold. And you can see here that over the last 15 years, from the 24th of December to the 24th of February, gold's gained on average 6.30%, 12 times out of those 15 years. Only lost value in 2020, 2012, and 2009. The rest of the time, gold gained. And the drawdown, look at the drawdown. Minus 4.53% is the maximum loss, and the maximum profit was nearly 20%. So on average, if you'd invested in gold from the 24th of December to the 24th of February, every time over the last 15 years, on average, you would have made 6.30%. That's why I love Seasonax, and that's why we provide it to our clients that sign up to our special programs, and I explain to clients how to use it. So Fed policy is going to have the most major impact on gold prices. As soon as the Federal Reserve announce some kind of pause in their rate hiking cycle, that's the time that I will personally be buying gold. But above gold, I'm going to be buying silver. Why, you say? Well, there's an old school hedge fund manager who spoke to me in March 2020. Whenever he sends me an email, I listen. He's had years of experience in the market. He's approaching retirement now, and he said, look at silver over and above gold when the gold-silver price ratio rises above 100. So when the gold-silver price ratio is high, in other words, when silver is cheaper relative to gold, if you want to find out more information about this, speak to me at booth 110, then silver tends to outperform gold. So the gold price ratio is heading back up towards 100. So if the Fed announce a policy U-turn, the dollar will sink, real yields will sink, and you'd expect silver and gold to rise, but silver to outperform gold. So you see, I presented to you there, and I hope you can understand now when I said I wasn't being arrogant, saying that actually you can understand what gold prices are. I wasn't being proud. I was just actually being specific. When you know the key drivers of what's driving gold and silver, it's much easier to forecast the direction of silver and gold going forward. So if you would like to find more information about those, maybe have a look. I can tell you which information to look at. I write a lot on my blog, and you can take my business card. I'm at 110. We can be in touch if there's something that you've understood and would like to know more about. A few things to announce. HYCM, we do have a new mobile app, which means trading when you're moving around is much easier. It's also available on the Google Play Store and the Apple Store. So it's very accessible at the moment, which is a really helpful thing. It also has a wallet. I work as a senior commentary analyst for Financial Source. If you found that helpful about gold, I give that kind of analysis across hundreds of different instruments, currencies, commodities, global indices, oil markets. I explain to a group of around 500 traders each day, this is what's been moving the market and this is why. You might say, okay, Giles, that's good. What about live trading events? I also do live trading events. So I explain to traders, this is the event, this is what we're looking for, this is what's going to move the market, this is what's not going to move the market, and this is the bit in between. And so I show traders what the likely direction of different instruments, commodities will be on specific economic data points as they're released live. So that's something I do. I also provide access to SeasonX, and we have another product called Trading Central, which provides just basic technical analysis, which is also helpful. HYCM is also expanding its offering beyond CFDs. And in 2023, we're going to have a new product which has zero commission and zero swaps. It's the way the market's going. The retail traders want access to a whole range of markets, and they want it for as competitive a price as possible. So we've done that. And we'll be having zero commissions, zero swaps, and you can trade a whole range of different shares, and that complements the SeasonX product we have brilliantly. I don't have time to go into all the detail that you would find very useful if you're trading. So please come along to booth 110. I will be doing a question and answer session at the end and at my booth where I'll be answering people's questions. And I also have this offer that's uniquely here today for people if you would like access to some of these resources I've shared, including access to me as a professional analyst. You can get all of that with these different offers that we have available. All the details will be at the booth, but it does include complimentary access to those live trading events which I outlined. So if you took the 3-month offer, then it will be here around the turn of the year, at which point I'm expecting a turning point to come for gold and silver sometime between now and December. So I will be there and I will be signaling when that significant shift and change has happened. I'm also going to be speaking at 4:10 p.m. in the other hall as part of a wider panel, talking about a very interesting topic, which is how central banks' actions have impacted financial assets, as well as some of the future that I'm expecting for how central banks have to keep on intervening into not only financial markets, but also into domestic markets for some time to come. So thank you very much for your time and for listening. I hope that you've enjoyed that presentation on trading gold and silver in a high inflation era. Thank you for your time.